All right. As of July 1st, the IRS uh, has changed the mileage rate, right? As of July 1st, 2022, the mileage rate increased from 58 cents to 62 and a half cents per mile. And that was to help combat the rising cost of gas. Okay, because if you've been around for like the last couple of weeks, you know gas is high. Good Lord, like Willie Nelson, Snoop Dogg kind of high. And so that's one of the things that the IRS did is increase the mileage rate to help combat that. Now, the reason I want to talk about this today is because business owners are going to have to be very careful, because the old mileage rate of 58 cents is good from January 1st to June 30th. And then the new mileage rate takes effect from July 1st to 2022 to December 31st, 2022. They have not said anything about 2023 yet, as far as I know. Okay. So it's important for you to make that distinction, because it's going to be very easy for you to decide, okay, we'll just report all of our mileage and take that higher mileage rate. That's the wrong answer. You really got to separate that out. So if you have not divided your miles between January to June and then started July to carry out through December, you really need to do that. It's still early enough in the month of July to get that done. And it's important that you do this, because in the event of an audit, guess what? Mileage is going to be one of the first things audited, because mileage is the highest paying tax deduction that we have. And inaccurate mileage, you'll wind up having to pay stuff back. Who wants to pay money back to the IRS? Now, what makes it so bad is 9 times out of 10, most people generally do not have an accurate mileage log that has all of the required information that you need in order to substantiate your mileage. So then if you get audited and you don't, first of all, don't even have those miles separated, but secondly, you don't even have a mileage log, guess what? All of the miles get tossed and you don't get anything. Okay. And then you have to pay all the money back. We don't want that to happen, right? We really want to be diligent about the mileage, because it is a fantastic deduction, okay, for your business miles. Even though, with gas as high as it is, who wants to drive anyway? But if you do, you might as well get it right. And even as tax professionals, this is going to be something that you really need to specifically ask your clients, okay? Because they're not going to be thinking about this. And a lot of them probably won't even know about this change, right? So we have to be diligent as tax professionals to say, hey, we need those miles between January to June and then July to December. Start now, because we know how that's going to work out come tax time, right? Nobody's going to know. Okay, that's it. But the main thing is really talking about this mileage log, because generally speaking, everybody knows about how to take the vehicle expense deduction, right? You either have the mileage or you have the actual expense method. But regardless of which method you use, you have to have the accurate number of business miles. And in order to do that, you also have to have this mileage log. Now, this mileage log, and listen, there's apps out here for this. Okay, you could go get an app. I don't care if you use pen and paper. I saw this one lady, you guys, I had this client. She was a master of the mileage log, and all she had was one of them little pocket-sized little spiral notebooks, and she had every drop of mileage from day one of the year to December 31st. Okay, so whichever method you choose, you got to make sure you have all of the information. That's going to be the date of the trip, the address, the actual address where you leave from, whether it is your home office or if you're making rounds or whatever. So you need to have the beginning address. Then you need to have your destination address. You also need to list the purpose of the trip and the total miles. Okay, those are the main things that you need in your mileage log. If you have those things and you do this on a daily basis, then your mileage log will be tight at the end of the year. Like I said, there are apps for that. But even with the apps, you have to go through and distinguish between business and personal miles so that you are not getting paid for your personal miles, or you're not deducting for your personal miles. Okay. So you really have to be diligent about, swiping, whether it's business or personal. It's not going to be one of those things where you just, turn on the app and it's going to do its job and it's supposed to know. That's not how that works. Okay. Unless the only reason you drive is it's for business. I don't know anybody who does that. So the main takeaways here are, number one, for 2022, you need to separate your miles from January 1st to June 30th, and then July 1st to December 31st, 2022. I'm still got 2021 on the brain, y'all. December 31st, 2022. And then you need to have the accurate mileage log, okay? That's going to detail those miles. So regardless of whether you choose the actual expense method or the standard mileage rate, you have your miles, you have your complete mileage log, and you keep that with your tax return in the event that you do get audited. We can never tell you will or you won't get audited. We can just tell you how to prepare, okay? So that's it, you guys. Thank you so much.